Good day, Junior Tickies. I'm Mrs. Brimacombe. We're going to look now at Chapter 10, Activity 4. You are provided with the information related to Picture Perfect. The financial year ends 31 March 2023. The business makes use of a perpetual inventory system. So what is required of us? 4.1. Prepare the trading account and the profit and loss account on 31 March 2023. 4.2. Which principle of GARP is applied when depreciation is calculated on vehicles? Explain. So take note of how GARP principles is integrated. And then 4.3, the business conducts a physical stock count which is compared to the trading stock account. List internal security measures that need to be implemented to prevent losses from occurring. So now internal control is also integrated into this question. So in this activity, we are going to focus only on our final account, which is the trading account and the profit and loss account. So we're going to do it a little bit different than what we've done in the previous activities. This is typical an example of a question that could be asked in an exam or in a test where you only asked to complete this. So when completing the trading account and the profit and loss account, remember, in my trading account, we need to calculate our gross profit. In my profit and loss account, we need to calculate the net profit or loss. So this means that everything in the nominal account section should go to either the trading account or the profit and loss account. Because in my nominal account section from the pre-adjustment trial balance is all my income and all my expenses. So my step number 1 is show in brackets all the accounts where it's supposed to go. Starting with sales. Sales will always appear on the credit side in your trading account. Now you need to remember, debtors allowances is always closed off to sales, and then sales is closed off to the trading account. Thereafter, cost of sales is closed off to the trading account. Profit and loss account, year-end adjustments happens at the end of the accounting period. Closing transfers happens at the end of the accounting period. Our accounting period ends March 2023, the 31st. Do not forget, when we're looking at our profit and loss account, all my income accounts will always appear on the credit side. All my expense accounts will always appear on the debit side. So now we're going to simply write from the pre-adjustment trial balance, and we're going to write everything in brackets. And make sure as you go along that you tick it off. Carriage on purchase is not included in a perpetual inventory system. All movement of trading stock is added to the trading stock account. So if we are paying for carriage on purchase, it means that should be added to the trading stock account. So there's most likely an adjustment with regards to this. So do not include this in your profit and loss account. Consumable stores, interest on overdraft, repairs and maintenance, bank charges. Interest on fixed deposit is an income which appears on the credit side. Discount received is an income. So this is your step number 1. A reminder, you need to show your calculations in brackets. No calculations, if your final answer is wrong, you lose all the marks. Adjustment number 1. The office block was repainted at a cost of $8,900. The bookkeeper erroneously charged this to the land and buildings, which means my land and buildings, which is regarded as an asset, was incorrectly debited. So to correct this, we need to credit land and buildings so that repairs and maintenance, which is an expense, can be debited. If it's repainted, this forms part of my repairs and maintenance. So repairs and maintenance, we need to add 8,900. Adjustment number 2, the March 2023 bank statement revealed the following. Bank charges 275, interest on overdraft 400, a direct payment of 3,042 Apple supplies a creditor in settling our account. Picture Perfect was granted a 5% discount. So first we need to show the bank charges. There's no calculation involved. They said to us our bank charges is 275. This means that this must be added to our expense. This means plus 275. Bank charges is an expense which will increase. Interest on overdraft 400. Interest on overdraft is an expense which means it will increase. So we're going to take plus 400. But now when we're looking at the direct payment that was made, a payment was made to our supplier, 3,040, which means bank is credited and creditors control is debited. But it says there, Picture Perfect was granted a 5% discount. So this is your more challenging calculation. You need to realize, but this amount is the amount that we've paid. And if we've received a 5% discount and we want to find out but what is the discount, we need to say times 5 divided by 95. Discount received is regarded as an income, which will mean that our discount received, our income will be plus. Adjustment number 3. Depreciate all vehicles at 20% per annum according to the diminishing balance method. Note, a vehicle was purchased on 1 February 2023 for 180,000. This has been recorded. Please make sure that when you're looking at calculating depreciation, always start with the movement. If we're looking at the movement, a new vehicle was purchased for 180,000 and it says this has been recorded, which means that the balance from the pre-adjustment trial balance is the balance after the new vehicle was purchased. So to find out the balance in the beginning, we will need to take 480,000 minus 180,000 so that we can find out but what is the depreciation that we need to calculate on the old, that which we had since the beginning of the counting period. So this is where if we get the balances wrong, we're going to calculate the depreciation incorrectly on the old. So when we purchase the new, we purchase it on 1 February, which means we need to calculate it for 2 months. Depreciation was calculated at 20% per annum, which means we need to take 180,000 times 20% times 2 divided by 12. Diminishing balance method means book value. Is not relevant when we're calculating it on the new, because it's the first time that we're calculating the depreciation. But it is relevant in calculating the old. To calculate the old, the remaining, we need to use the book value, which means the cost in the beginning, 300,000, minus the accumulated depreciation, 192,000, then we can only times that by 20%. And the remaining or old is always equivalent to 20 months. To find my total depreciation, it's the new plus the old. And that goes into my profit and loss account as an expense. A reminder, when we show our depreciation, the 2 counts involved is depreciation, which is an expense, and accumulated depreciation on vehicles, which is a negative asset. A debtor, SRU, returned goods with a selling price of $7.50. The cost code is RSS and the secret code is film groups with S starting with 0. No entry has been made. So here the secret code is applicable. They specifically said the first letter, the S, which is the last letter, equals 0, which means that the first letter will start with number 1. So all we now need to do is find out the cost, which means R equals 6 and SS is 0, 0, which means that the cost was 600. To show the selling price, we need to open up debtors control and debtors allowances to show the cost, trading stock, and cost of sales. Debtors control is going to be credited, account debited, debtors allowances with the selling price. To show the cost, trading stock is going to be debited, cost of sales is going to be credited. Because debtors allowances increases, reminder, where do we close this off to? We're closing it off to sales, which means that I've got two ways in which I can indicate this. I can either make that a bracket and say 21,000 plus 750 and the total must be subtracted from 510,000, or I can say minus 21,000 minus 750. Cost of sales is credited, which means we need to minus 600 from the amount in the pre-adjustment trial balance. Number 5, the accountant opened an account for transport on merchandise bought. Correct this error. So this is what we spoke about earlier. When we're using a perpetual inventory system, we don't have a carriage on purchase account. It should have been added to the trading stock account, which means that total 4,560, we need to credit that so that trading stock can be debited. Sorry, the correct amount, 4,500. Adjustment number 6, stock on hand on 31 March 2023. Trading stock, 49,890. Consumable stores used during the year amount to 4,500. So don't make the common mistake. Do not compare that figure with the balance in the pre-adjustment trial balance. Why? Because we had trading stock which was returned by a customer and we had a correction, the carriage on sales, that we needed to correct. My new balance must be compared to what we physically counted. So if I look at the trading stock, we have 46,900 plus the 600 plus the 4,500, which means that my new balance is 52,000, which must be compared to that which we physically counted. And if I compare the two, according to our trading stock account, we should have 52,000. But according to the physical stock count, we've got 2,110 less. That means we've got a trading stock deficit, which is an expense which goes into the profit and loss account on the debit side. Now, consumables, please be careful. It's asked a little bit different than what you used to know. It says there, consumable stores used amount to 4,500. So from the pre-adjustment trial balance, we've got 5,000 as a total brought forward. We've used 4,500. So that amount should appear as your final figure in the profit and loss account, which means that the difference will be 500, which will go to consumables on hand. So in my profit and loss account, I can immediately write How much have we used? What is our expense for this accounting period? 4,500. Number 7, commission on goods sold is still owed by CC suppliers. The products were sold for 10,000 and the commission is 25% of the selling price. So commission is still owed to us. This is commission income. And if it's still owed to us, it should be added. But how much? It says there, the products were sold for 10,000 and we get 25% commission. So we just need to times that by 25%. And that must be added to our commission income. Because this is still outstanding, it would have gone to accrued income. In this activity, we actually don't care about that part because we've only been asked to complete the trading account and the profit and loss account, which means that we are going to say plus 2,500. Number 8, rent was received for April and May 2023. The rent increased by 700 from the 1st of November 2022. So this is a little bit of a more challenging adjustment. Where do we start? First, it's important to identify my accounting period ends 31 March 2023, but rent was received for April and May 2023, which is outside of our accounting period. So we've received this 2 months in advance. But now we can't just take the total brought forward from the pre-adjustment trial balance and divide it by 14 to find out the monthly rent, because it increased with 700 from the 1st of November. So step number 1, take out the total increased amount to find what was the rent before the increase. So 700 times 7 equals 4,900. Then take 88,900 from the pre-adjustment trial balance minus 4,900 equals 84,000 and divide that by 14 to find out the rent before the increase. Now we simply need to add the 700 so that we can find out what was it after the increase and how many months must be taken out? 2. So to take this out, it doesn't form part of my income for this accounting period. It means rent income will be debited and account credited deferred income or income received in advance. So in my profit and loss account, we are going to minus 13,400 and that will be the rent for this accounting period. Adjustment number 9, rates and taxes of 2,500 is still payable. If it's still payable, it means that we need to add it to our expense. Rates and taxes is going to be debited, account credited, accrued expense. In my profit and loss account, we're going to go to rates and taxes and we are going to add 2,500. Adjustment number 10. The fixed deposit account appears in the books below as follows. So we've got the balance, 1st of April, 50,000, and August 2022 on the 1st, bank CPJ 60,000. The investment rate on the fixed deposit is 9% per annum. Interest is received monthly and paid into the business savings account. This means interest is not capitalized. To find out what is the interest for this accounting period, I cannot just take the balance from the pre-adjustment trial balance, 110,000, and times that by 9%, because there were movement during the year. If I look at my accounting period, it ends 31 March 2023, which means it starts the 1st of April 2022. In the beginning, our investment was 50,000. On the 1st of August, we increased that by 60,000, which means from August until the end of the accounting period, my investment was 110,000. So to calculate the interest, we first need to calculate it on 50,000 for 4 months and then on 110,000 for 8 months. So 50,000 times 9% times 4 divided by 12 equals 1,500, and then 110,000 times 9% times 8 divided by 12 equals 6,600. So what am I supposed to do with this info? My total interest for this accounting period is supposed to be 8,100 if I add those two together. But according to the pre-adjustment trial balance, the total brought forward for interest on fixed deposit is 7,275, which means that there is still interest which is outstanding. When completing the profit and loss account, we are going to simply add the interest to the amount from the pre-adjustment trial balance. But have a look. What we've calculated our interest is supposed to be this year. Immediately write it as your final figure. The difference is the 825. After we've done all the adjustments, we can now close off these two accounts. And we start with the trading account. Close the bracket and total, the same as with cost of sales. The credit side minus the debit side equals the gross profit, which is taken to the trading account. For every debit, there's a credit. Now I'm going to close the rest of the brackets by just adding. If there was no adjustment, we simply close the bracket, and that will be the same amount that will appear as your final figure. Once we are done with this, we can now calculate, did the business make a profit or did a business make a loss? So please have a look in this activity. If I compare the debit and the credit side, it's clear that the debit side actually is more than the credit side. So I'm going to start adding up the debit side, and if I subtract everything on the credit side, that will be my balancing figure, which means that the business made a net loss in this accounting period. The next question, 4.2, which GARP principle is applied when depreciation is calculated on vehicles? Explain. It is prudence. Prudence means being conservative. The value of vehicles depreciate over a period of time. Therefore, the business must be conservative and calculate the depreciation on vehicles. Take note, you cannot just give a description of what prudence means. You need to apply that. It specifically said, why do we calculate depreciation on vehicles? And you need to explain how prudence fits into that. The next question, the business conducts physical count, which is compared to the trading stock account. List internal control measures that needs to be implemented to prevent any losses. So here are all the possibilities that you can write. Make sure that you study that. Division of duties, regular stock counts agreed to the ledger accounts to identify deficit or surpluses. Ensure all stock cards to be kept up to date. So use this as part of your studying for internal control. You don't need to mention so many points. This is just all possibilities that you could mention. Please refer to the workings. If there's at any stage any of the adjustments that you're still not 100% sure of, go back and check and see how did we actually get to the answers. All the adjustments that we've discussed while completing the trading account and the profit and loss account is illustrated here. Thank you very much. I want to leave you with this quote. There are no shortcuts to any place worth going. Next, we're going to look at the last activity, activity 5. Have a wonderful day.